Hi everybody, it's me again, and I want to talk about understanding Wall Street. This is chapter 1, and the question it asks is, what is a share of stock? Well, daily, billions of shares of stock are bought and sold. How did these shares originate? How are their prices determined? First, a company must be created. How does it begin? Where does the money come from to start the company? In this case, the chapter talks about New Bright Units, a company creating 100,000 units and have sales of $3.5 million and net income of $260. Now, they've got a good company going here, and they want to grow their company, and they've got to sell more stock. So one of the things they have to do is divide the business to give others some ownership. In order to do that, about the only way to do that is establish a corporation. Stockholders are not liable for any more than what they invest. And the stockholders, of course, select the board of directors, and then the directors decide who's going to run the company. They've made a decision to authorize 400,000 shares, 250,000 of which they want to sell. So first, the company, in order to do that, has to establish a track record. Now, the question it asks is the importance of profits. Why would anyone risk a large amount of personal savings to establish a company? The answer is simple. It's profits. That's the fundamental reason that businesses are created. And I'm going to read here. Without profits to spur initiative and investment, businesses would not be built, better products would not be sold, and many more workers would not be employed. And once you start a business, they're going to be looking at the financial statements, which we all know are the income statement, the balance sheet, and the statement of cash flows. Now, the stock price. How will a stock price be determined? Well, a stock price is worth only what somebody's willing to pay for it. If the firm is prospering and the outlook is bright, many investors might be ready to buy. But if the outlook is not promising, anxious buyers may be scarce. To make a long story short, the price is determined simply by the supply-demand situation at the moment. For example, an investor is most interested in a company's earnings outlook, its dividend prospects, its financial condition. The investor is interested in the price-earnings ratio. Dividend yield, they're interested in that too. Over an extended period of time, the stock price will most likely rise or fall in line with the company's earnings, dividends, and financial conditions. And for that, since the stock price will follow the firm's financial conditions, for us who are interested in investing in the stock market, we are looking for companies where the earnings, dividends, and financial conditions are very good and they're rising. Now, why do people buy stocks? There are 3 different kinds of people that invest in stocks. There's an investor, generally the most successful. They're the ones that are disciplined, that are in it for the long term. Then there's speculators, and they're willing to assume great risk for a potentially great reward. Then there's the traders. They attempt to take advantage of very small price changes, and they buy and sell stocks daily. That's not as successful, and for a lot of people, it's not a successful way to invest at all. But anyway, traders are less interested in the intrinsic value of shares than they are in taking advantage of small price changes. Investors make money from dividends and capital appreciation. Market trends. The older person, like me, they like high, secure, dividend-yielding stocks. I'm not sure I quite fit that mold. Middle-aged people like higher quality stocks with growth. Younger, like you folks, perhaps are interested and might take greater risk in stocks in rapidly growing companies. I did that 10, 20 years ago when the high-tech industry was booming. It was an exciting time. An investor should use only as much as he or she can safely afford to identify realistic investment objectives. Know what to expect from each dollar invested. Now, stock prices will always fluctuate, and there will always be uncertainties. But as long as there are innovative men and women striving to profit from new ideas to build new products or offer new services, company values will rise. I'm going to read that again because that's really quite important. There will always be uncertainties. But as long as there are innovative men and women striving to profit from new ideas, to build new products or offer new services, company values will rise. Profit opportunities for long-term investors is no less promising today than it was 5 years, 10 years, or 50 years ago. And that's certainly true. Common sense investing. Today's news can be intimidating, especially the stock market. The Dow Jones Industrial Average and those prices go up and down sometimes significantly, and so it can be confusing. Actually, for most people, investing in the stock market can be a simple process. It can be educational, challenge, and with a little patience, it can be very rewarding. Thank you very much. That ends this portion.